Okay, that's a look at a couple stocks and futures that I've got my eye on that I think you should be dialed in on. Let's bring in Scott Bauer, the CEO of Prosper Trading Academy. He's joining us for a look at a few that he's got his eye on. Scott, welcome. Thanks for joining us this Thursday afternoon. But first, Scott, before we get into a couple names you're dialed in on, the jobs report coming in much better than expected this morning. It seemed to help the market get a little bit of a lift off those overnight session lows and, well, the indices off that cash open this morning.
Yeah, it certainly did. And first off, I want to apologize for the casual look today. It doesn't always happen that way. But, yeah, you look to see what we got this morning, and that jobless number was a great number. Unemployment benefits falling to a 17-month low, right? So fantastic for the job market, for the recovery. What's even, in my book, maybe even more important is the number of people continuing to receive benefits after, continuing claims. That dropped also. That dropped another 79,000 to about 2.8 million. So that's the lowest level we've seen since basically the start of the pandemic. All real positive, Ben. However, and I hate to bring in the howevers, we also got another pretty important economic number out there this morning, the Philly Fed number, which was a bad number. It was really, really weak, the worst one we've seen in a while. Even though, the number itself, the reading itself is still positive, this was one of the worst numbers we have seen in a long time, which just, kind of exacerbates the same mantra that we've been seeing and the troubles that companies are having with supply chains and just getting product to consumers.
I agree, Scott. I think the jobs number was strong, and should we see that thing back below the 300,000 level, we'll be talking pre-pandemic levels. But I think the enthusiasm was somewhat capped off by that disappointing data point you commented on there, the Philly Fed. But I did want to mention that the Philly Fed kind of raising and adding to some of those concerns. The prices spiked as well, another big increase there. So there you can see the index at 19.4. Estimates for 23. Scott mentioned below estimates, below prior. But again, the prices saw a significant increase. I think it was like to 72.9 or something. So something to watch there. It feeds into those inflation concerns. Yeah. All right, let's talk retailers, Scott. A few that you're dialed in on, a couple companies that just reported quarterly results. First, Macy's up something like 20% last I looked after the company beat top and bottom line estimates. They raised their 2022 guidance. They reinstated quarterly dividend and authorized a $500 million share repurchase program. I mean, what more can they do to wow investors? I can see why there's so much optimism related to shares of Macy's today.
Man, they sure did wow investors for the first time in a really, really long time. And this was quite a surprise. That's why you're seeing the stock up 20+% today. I'm not buying into it, Ben. This is one that I'd be really, really cautious on. All this good news out there, but still, they're not the biggest e-commerce, biggest e-retailer out there. They're still, really banking on foot traffic. And listen, hopefully we get through this Delta variant, and people are going to really head back to brick and mortar like they did over the last quarter sooner rather than later. I just don't see that happening. That being said, though, massive amount of call buying today. It's about a 6-to-1 call to put ratio of options being traded today, and a huge amount of September 21 strike calls were bought today. So, like you said, investors think this is really bullish. I would just be really cautious on this one.
Okay, I don't think you're alone, Scott. I mean, I think a lot of people expect if there is that return, as you mentioned, to brick and mortar, Macy's may not necessarily benefit as much as some of the others that are out there. Let's talk about Kohl's, ticker symbol KSS, because, well, there you can see some of the results from Macy's, some of the highlights, revenue growth of 58.7%. And as you mentioned here, this was a lot better one that we have seen across the board. Those numbers look pretty good compared to the column on the right there, at least, on some of the declines that we had seen prior. Revenue growth got down 38, almost 36%. Kohl's beat analyst expectations on, well, EPS by over $1.20 a share. I think it was. Revenue also topped. They saw, they raised their fiscal 2022 EPS above consensus and revenues above consensus as well. There you can see $2.48, well above the $1.30 expected.
And full disclosure here, Ben, I have been long and wrong in cold stores for a long time. So I'm feeling a little bit of a vindication today, but not much. But technically speaking here, really nice bounces above both the 50 and the 200-day moving averages. I still think this is probably the cream of the crop when it comes to the discounters. And I'm not talking about Walmart, Target, or Costco. I'm talking about the rest of the discounters. I love this stock here. And I still think that there is the potential here, whether it's this year, next year, somewhere down the road. Now that Amazon is absolutely expanding their retail footprint in a slow way here, the relationship that they have with Kohl's, to me, would make so much sense for them to move into 20, 30, 40,000 square foot big box stores. So this is one that I will continue to hold on to a long-term portfolio.
Interesting. We'll see if some of that signage change on some of the changes, I should say, on some of those stores that are in some of those malls that we're looking at, or not malls, but in the shopping centers, I should say. Let's talk about Estee Lauder, another stock that had been kind of, well, left for dead by many. They beat by, it was over 25 cents a share. They beat revenue as well. They guided EPS below consensus, revenues in line, fiscal 2022 above for EPS. Above consensus, and revenues also for the year fiscal 2022. There you can see 78 cents. They were looking for 51 cents, and well, below EPS for last quarter, more than half of EPS for last quarter, but well above that loss that they saw for last year. EPS down 53 cents. What are you seeing there in terms of reaction to an EL?
Yeah, I think the street likes the guidance part of this. And from a technical standpoint, this one kind of follows along with the others. Very consistent. This one bounced real nicely off the 50-day moving average. The reports were, were so-so. Top and bottom line, they were decent, but I think it's the speak about their guidance moving forward that the street liked. Another one I'd be really cautious on.
All right, Scott, last but not least, let's talk ticker symbol TPR, Tapestry. They're currently trading down by about 3%. They're taking a hit, coming off and stalling up around $50 back in May, and have really struggled to regain composure since, back down to $37.50. They beat on EPS only by about a nickel, though. I saw they beat on revenue as well, and guided for the full year 2022 EPS above consensus, revenue above consensus also. Here you can see the number, 74 cents earnings per share. The estimates were for 66. There you can see 1.62 billion. Scott, they were looking for 1.59. I'm surprised to see them coming off here, down 3.25% as mentioned.
Yeah, me too, quite frankly. And you look at the charts here, 39-ish was the 200-day moving average, which is, historically been huge support. So I think this is a real good opportunity here in the option space to be a put seller or a put spread seller. I'm not necessarily looking for Tapestry to make a big rally back to the upside, but I really think this is a good entry point for a trade. And by using put spreads here, and premium is still fairly high even though it's post earnings, I think this is a good entry point here. Again, I'm not looking for 5, 10, 15% rally in the near term off here, but I think this is a real good support area.
All right, stock that's been in a range here, we're talking since February, roughly, well, we'll call it 38 up to 49. 67 was the high that they posted. That was back in the first week of May. So we'll keep an eye on Tapestry after running up last fall from around 14 all the way up to that $50 level again to begin the month of May. They've been sideways, accepting price activity, these upper levels here. So maybe they can get a little bit of a regain composure off this lower extreme here and work their way back into the middle and retest the upper. Scott Bauer, appreciate you joining us, the CEO of Prosper Trading Academy.